And thanks for having me, Mike. For those of you that know me, you most recently remember my time at the Innovation Council, but prior to that, essentially 12, 15 years in the tech sector. I've been an operator in 5 startups. That's essentially how I developed the passion for this community, particularly around pre-revenue startups. And more recently, working here with Bioenterprise. And I'll just say a few words for those of you that aren't aware. I think we have a few words later, but Bioenterprise is an award-winning acceleration operation out of Ontario originally. They've been around for 12 years, have done just a tremendous amount of work in the ag community in Ontario, and more recently have been moving into the East Coast and through into BC as well. So the interesting thing about Bioenterprise is they have a national perspective and a global perspective. They've got a cross-Canada network of scientists that can kind of parachute in and provide advice on any number of technologies related to a very wide berth of agriculture technology. And as well, they've got advisory networks and professional networks in all the big companies around the world, as well as in regions around the world. So it's a unique perspective that we're very, very fortunate and privileged to have here operating actively in BC. I'm pleased to be here with an esteemed group of investors representing as well, like last time, both the angel side of things as well as the venture capital side of things. So without further ado, I'll just go down the line and let them all introduce themselves.
Hi, I'm Keith Gillard with Pangea Ventures. We're a advanced materials or physical science focused VC, 17 years old, just started investing our 4th fund. We are backed by 21 major chemical and materials companies, including BASF, Mitsubishi Chemical, Toyota, Samsung, etc. That gives us access to the minds of the major partners and eventual acquirers of the startups that we invest in. That's also my background. I was previously president of BASF Venture Capital America.
Good afternoon, Tom Urban. So my career has been mostly in big ag, worked for Pioneer Hybrid for many years, and then subsequently DuPont. Came out to BC as the CEO of a venture-backed early-stage forestry seedling genetic company. And then 5 years ago, founded the creatively named Agribusiness Advisors. And we invest and advise in very early-stage companies. Right now, there are about 14 companies in the portfolio. We are, I would say, passive or cheerleaders in probably half and quite active in half. Interestingly enough, probably half of those are within 100 miles of Vancouver. So it's been a very interesting experience. I thought I'd be investing in St. Louis and Minnesota, but there's a lot going on right here.
Mike McGee, Avrio Capital. Just on a personal note, I'm from Calgary. I really like BC wine, so I plan on bringing a couple bottles back with me. And been a finance guy all my life, not a farmer, not a food guy, worked in high net worth family offices for TD Capital, BMO Capital. Thank you.
Great. Well, thank you very much, everybody. We heard a lot about the ag industry from Mike in his opening presentation, and he just absolutely flew through a whole bunch of super interesting concepts. And so I think I would like to take some time to revisit some of those in this presentation. I'll make the point that today we tried to cover both food and ag in a distinctive manner. The food innovation, essentially the innovation ag panel was before us, and we're ag. There's a difference between the two for sure, and we'll touch upon that. But moving right into the discussion, I want to start with the consolidation, because we've got a fair number of investors in the room, and I think for most investors, when there's a large trend of consolidation, that does represent historically opportunity. And so I'd like to just open the floor to everybody here on the panel to think about this consolidation that we're seeing. I know Mike mentioned it. Keith has written a great blog post on it. If you want to learn more, you can find that on Pangea Ventures. And just talk about the opportunities you see coming, the challenges that you see coming, both for the entrepreneur as well as for investors.
Sure. So the consolidation really stuck everything up for 2 years, where you can take a look at the number of venture investments, or you can take a look at the internal R&D spend of any of the groups, except for Bayer, who continued to be active at their usual levels. But the rest of the groups all contracted their R&D spend, both in terms of absolute dollars, but also as a percentage of their sales. And they dropped, those that had venture groups dropped their ag-related investments to less than half the rate of what they did before if they didn't stop them altogether. That all changed last summer. Suddenly, with clarity on the Monsanto and Bayer relationship, you saw Monsanto really opening up. They led a Series C in one of my ag companies called New Leaf Symbiotics in St. Louis. They became active. Their R&D spend began to rise. The Friday when the Dow-DuPont deal closed, Monday morning, suddenly we had Dow and DuPont phoning our ag portfolio companies and phoning me. It was all of a sudden they were away to the races. So things really changed last summer. There's a big pent-up appetite for innovation. The groups there that know that they need it and they're starved, and now they are looking externally to find it. So I think it's a really, really good time to be an ag innovation company or an investor such as we are.
Can't do any better than that.
I agree with everything Keith said. I think one other comment I would add is, I mean, if you look at ChemChina's acquisition of Syngenta, a lot of that rationale would arguably be is China wanting to assure supply, ensure their ability to become self-sufficient on the food side. You know, Agrium's acquisition, $500 million in savings, I think, was the number that ultimately Nutrien expends. That's the new name, expects to achieve. So, and large part of the cost savings is because they weren't seeing the growth. They weren't seeing the innovation on the product side. And so a lot of the consolidation is bottom line driven. It's going to create opportunity. And certainly, much like Keith has said, we've seen more activity level since last summer and expect that to continue.
When you think,
Oh, we got two luxury.
testing 1, 2.
Here.
Okay, I'll take this one. So let me just ask you a follow-up question on this. Lots of pent-up demand for innovation is what I'm understanding, and partly because there was a bit of a stall in terms of the operation capacity of these large companies and their appetite for moving the innovation files forward. Ag is very diverse. For folks that are new to the ag space, everything from seed and animal science through to precision agriculture, through to the application of all the traditional digital technologies into ag. When you think about that innovation opportunity, are there any particular areas that you feel are the lowest hanging fruit that present opportunities for investors to really keep their eyes open for? Let's start with Tom.
Yeah, I think so.
Sure. I think. I mean, there are lots of trends, but I think productivity is still probably the number one. There are only, you go to an ag conference and it's a little crazy because you can walk across and you see 25 companies that are claiming 10% yield advantage. And there's not 250% yield advantage out there in the room. So I think in terms of the low-hanging fruit, the promise of yield on the one hand, and then really, and this is the whole precision farming concept, is efficiency on the other hand. So whether I'm using fewer inputs, whether I'm using less labor, so those two things are, I would say, the lowest hanging fruit. Now those things are huge, and the major problem for really early stage companies is that demonstrating value in either of those takes multiple seasons, multiple sites, and is really, really difficult to actually discern that my product is creating value rather than the 9 other or 15 other variables that have changed in that scenario. So it's low hanging, but in our world, it's super hard.
Yeah, great points, Tom. I mean, farmers are a skeptical bunch to begin with. At the end of the day, there's a lot of folks peddling, snake oil out there. By and large, farmers generally like to see, I think, we found out a $3 return for every dollar they're going to spend on these technologies. So having the data from field trials and similar soil types with similar crops is critical. One area that we think is going to be really a growth area, and Keith is involved in an investment in a business that's in this place, is on the soil health side. We've got the seed coating technology. We understand the whole NPK thing, and you can't put more nitrogen in the ground with runoff and environmental regulations and so forth. So understand the biome, the soil health around the root is really big. Indigo's in that space, Ag Biome's in that space. There's a Canadian company in Alcor. We think there's going to be a lot more money spent on understanding soil health as a means to enhance yield.
Yeah, I'm very bullish about the opportunities in that space. I would say biologicals biologicals, of course, been around forever, and as ag inputs, besides the seeds themselves, have been commercial for 100 years with BT. But we're now seeing resistance emerging to BT because of mismanagement and misapplication in the hands of the farmers. As a result, there's a terrific opportunity. If you look at BT, just for Monsanto's BT suite of products, there's about $1.8 billion in profit, not sales, but $1.8 billion in profit associated with the BT portfolio of products every year. And it's at risk because suddenly we have corn rootworm, and now we're seeing Colorado potato beetle. We're seeing more and more of these insects that have adapted, have evolved resistance to it, and so there's a huge opportunity to meet this, to protect this this whole product portfolio that is worth billions in profits every year. These type of changes are worth watching for when when an incumbent technology, and in this case is very safe technology. BT is a biologically derived molecule. But when something like this is at risk and is worth so much money, and you can come up with a technology that protects it or saves it, you can find not only adoption takes place very rapidly, but acquisition as well. And from an investment perspective, that's very attractive.
We've been talking about yield, and I just want to shift a little bit, and there may be some relationship to yield as well, but I want to shift to the discussion that's happening around the world in technology circles around industries, which is digitization or digital transformation. And there are many industries, resources being one of them, agriculture being another, that have been pinpointed as laggards of adoption of the most recent trends of technology. But I think we're starting to see evidence of that changing in agriculture. So I'd like you to comment, if you could, on digital technologies, the introduction of digital technologies into the agriculture space. You touched upon AI earlier, Mike. I think you even touched upon blockchain, but really just a wide open discussion on the digital transformation that's occurring in ag, and potentially where those opportunities reside for investors.
So it is enormous. So this was kind of the fourth wave of technology. Over the last 5 years, the number of sort of precision farming or technology companies and startups is exploding. Robotics, variable rate application, and what I see at the root of it is a big problem. And the root of it is that the view is farmers are smart people, and if I give them more information about what's going on, they will find something valuable to do with it. And that, I believe, is wrong. And so that, not that they're not smart people, that's not the wrong part. And so where we really fall down on this is people stopping at I'm giving you better information for your ground. They have to translate it to an actual activity that the farmer does differently and makes a difference. And I've seen that very, very seldom. So I think we're still early, and it's going to be a bit of a bloodbath in the next 36 to 5 years is my view.
Yeah, well put, Tom. Agriculture is the least digitized. There's no shortage of data out there now, especially obviously with rural connectivity. The problem is taking that data into something actionable for the farmers. I think there's, as you said, over 100 precision ag companies, and I think there's tremendous consolidation ultimately to come. But I think the guys that are focusing on sort of maybe integrating multiple technologies, whether it's weather stations, whether it's precision application, into one kind of workable model for the farmers that he can have in his combine as he's driving, and that has algorithms and AI behind it that comes up with a recommendation, maybe encompassing drone technology as well, is key. We're not there yet. We have a long way to go, and I think a lot of the folks that are providing that data ultimately won't be there in 5 years. I agree.
So I want to take a different angle at this and talk about AI in genomics. I mentioned our company New Leaf Symbiotics earlier. They've developed what they call it the prescriptive biologics knowledge base. It's a toolkit, but it goes beyond the usual observation, sequencing a genome, and making observations about which genetic sequences are associated with what kind of behavior, to as we get into now 10,000 and more strains of our particular type of organism we're interested in, where now the AI is now starting to make predictions about what type of sequences interact with each other in certain ways to create complex behaviors, some of which are very desirable and some of which aren't. But this then gives us early screening mechanisms by which to determine which strains should be prioritized for commercialization. It doesn't mean that they will necessarily work out or not, but we now have, thanks to AI, predictive means by which we can determine which of the thousands or even millions of strains could be commercialized, should be. Another example of that is I've issued a term sheet, not yet invested, but to a company that is also using AI for the production of enzymes. And in this case, they have discovered an enzyme that can replace the use of antibiotics in feed for I don't want to say which type of animal it is, but with a major customer. As we saw earlier, this is again an area where we're seeing huge change, huge pressure to abandon or reduce the use of antibiotics. And here comes technology, thanks to AI, at the right time with the right solution. So I think that there's an enormous role for AI to play in a place where, frankly, the growers will never see it, but it will make a world of difference to them.
Fantastic. Let's talk about the growth potential for young companies. And I'm reminded of the old Walmart story that those of you that studied business at some point in university probably heard about. Walmart succeeded in the initial stages because they actually set up their shops outside the traditional urban areas of all the other big box stores. So the question to this panel would be, we often, when we're in the entrepreneurial circles, we expand outside of Canada and the default is the US. And so the question is, are there other jurisdictions on the planet that potentially could be an opportunity, an underserved opportunity for ag companies as they think about an expansion plan? Because the US is very noisy. Everybody wants to expand in the US, especially those of us that are in Canada building companies. It seems like the natural next step, and it may very well be in many cases. But I guess, are there cases where there is really great opportunity by taking the technology to a less noisy, less crowded environment outside of North America.
There are certainly opportunities, but the American opportunity is, of course, enormous. It's on our doorstep, and it has a very clear and well understood regulatory pathway. And for many of the products that would be of interest to people in this room, it's actually, although it still can take you a year or 2 years, it's still pretty straightforward regulatory pathway. Mexican pathway is a little more convoluted, but also pretty straightforward, and you can, even as a startup company, commercialize and with distribution can market a product there. When you go out to the rest of the world, it becomes a lot messier. So there are opportunities, but it can take you years to introduce a product.
So I'm going to go with no. With sort of a parenthetical exception of a particular industry. So for instance, if you're developing technology for the nursery industry, right, you got to go to Holland. Okay, there are centers of excellence in Holland for certain things, in Israel for other things, and if you're looking as a very young company, oftentimes you're looking either to partner or looking to find demonstration sites. Not necessarily, going through a regulatory process and getting to a full market. So, if you're doing nuts and grapes, if you don't go to California, you're crazy. Okay, you have to go to California. But in certain particular areas that you look around, and there are centers of excellence beyond the U.S.
I would say it's difficult. I mean, we have an investment in a company called Morris Industries, which is a air seeder manufacturer based in Saskatchewan. Canadian market is the primary market, but increasingly looking to India and Europe to grow the business. Farmer's Edge, again, Canadian-based company, pivoted in the U.S., but increasingly looking to Europe. India is now, a good market, but from a regulatory standpoint, and Keith talked about this, U.S. is so similar to Canada, it's easy to make that transition. Europe, with any biologicals, each country, has different regulations, so much more difficult. So I think the natural direction is south of the border, and it's a big enough market that you're likely to see an exit. The other thing I would say is increasingly the companies we're seeing are successful have strategic partners, whether it's McCain trying to do something on the potato side or a Monsanto trying to do something on row crops, making sure that you have a key customer that you're working with ultimately to develop a product that generates a return for the end user as opposed to a science project. And so, we very much look for that in terms of, okay, are you working with Driscoll's on the fruit side in California? Who validates that ultimately that this product is going to generate a return?
I think that's a great point. It touches on partnering. One of the great opportunities by all of these foreign markets that are difficult for startups to penetrate is that once you've proven it in a domestic market, here in North America generally, let's say, you can partner. You may even be able to receive some significant amount of money for an exclusive for Japan or for Germany or a particular geography, which you would never be able to penetrate anyway, but your partner may be able to do so. I would just say that if you're negotiating these type of things, make sure that you put in a proper exit clause in the agreement for when you get eventually bought out. When the acquisition takes place, you don't want to make sure that that you've promised away a geography that's really important to your acquirer, that they have a way to get out of it.
Good. We only have a few minutes left, and if you'll just give me a couple more minutes. I just want to focus the last comment on the entrepreneurs and the pitches. So if you could just maybe provide a minute or so of narrative about what it is that drives you crazy about pitches that you'd like to see change in terms of red flags. And entrepreneurs, don't run out of the room and change your pitch before you pitch. This is for future reference because we've been working with all of you, but we'll just hear from the investors right now.
Never tell us what your valuation is. It's always wrong.
So I look at everything through sort of three lenses. The first is, can you do what you say you can do, right? So how can you, if you have a technology that does this, what evidence do I have that you can actually do that? Once I'm happy with that, the question is, does anybody care, right? So this is the old product market fit. Yeah, you can do it. It's fantastic. But this is about traction, velocity, whatever it is. Can somebody do it? And the last one is, do you have enough money to not die before you get to those two pieces? And so that's really if you cannot articulate what it is that you do and who wants to buy it, then, find another 3 minutes, I guess.
Just to add on to great comments that Tom and Keith made, have done some work on the size of the addressable market. We see, lots of numbers with not a lot of thought behind them. And the other one, in my view, is understand who your competition is and what their value proposition is. The business plan that says I have no competitor, and you Google it and you see there's 60 names that pop up, it pretty much defeats the purpose of the presentation pretty quickly.
I want to just underline that having competition in your space is good, right? It validates that there's something in that space that's worth working for. It's not bad to have competition.
Well, thank you very much, gentlemen. Intended to be a bit of a cross-section of a very, very complex industry. So again, the ag tech industry is extremely broad. There's a lot of different pieces of information out there. I would encourage you to seek out as many sources as you can. The Bioenterprise website breaks down the ag sector. These gentlemen's websites break down the sector quite well. So thank you very much, and good luck, everybody. Thanks very much. Good to see you.
Thank you, Dean and panelists. Definitely.